Welcome to a capital hungry breakdown of GBPJPY. So as we are starting a new year, of course, we are going to be doing some higher time frame macro analysis of GJ, both technically and fundamentally, looking at market structure, price action, buyers versus sellers strength, fundamentals, both macro and micro, and then using this information to project and forecast potential trade ideas as per swings and intraday trades that we can look at using our key levels and other concepts that we use in Capital Hungry. So right now you can see that GJ is on the 12-month chart. If you have watched the previous higher time frame GJ breakdowns, you will know there is a lot of potential for historical repetition. And very similar to gold, we are at a very key higher time frame decision point for buyers and sellers that is going to be heavily influenced by the potential recovery or worsening of COVID-19. Okay. So, and we'll talk about that in more detail. And of course, we're going to have to watch other catalysts when looking at the British pound and Japanese yen, such as Bank of Japan's monetary stimulus plans, as well as Bank of England's monetary stimulus plans, as we have Bank of England speakers this week and next week. And of course, how the whole Brexit deal is really going to unfold and if it's going to lead to a rebound in UK's economy. So starting off on the yearly here, and what was discussed in previous GJ breakdowns, as you can see prominently since the 2008 crash, where we had a massive increase in the value of the Japanese yen and a sell-off of our risk currency, such as GBP, Euro, Australian dollar, New Zealand, Canadian dollar. We have had sellers in macro control. We had this massive sell-off move, historical lows created at around the 120 price point. And even when price entered that economic recovery stage, it only created a lower high as Brexit entered the scene and we went to revisit these lows. What we want to identify when looking at this higher time frame structure, and as we zoom into the quarterly, monthly, and intraday charts, is even with this lower high that was created in respect to this bearish structure and Brexit entering the scene, as well as coronavirus entering the scene in 2020 and all of that negativity in the markets, it was not enough to break below previous lows or create new lows, right? Because obviously when we're looking at a trending market, you have price start at a high, create a low, and this is your bearish trend. Of course, when you have a lower high respected, you're at least expecting to revisit those lows. But truly, if sellers are in control, new lows should be created, especially if the fundamental catalysts are there behind it. So what can we digest as investors, as traders, as people who understand or are learning about the economies, is that even with this massive negative impact from 2015 being Brexit, even with Brexit still lingering for an extended period of years, even with coronavirus pandemic markets hitting the scene and causing a sell-off on global equities and causing mass hysteria and fear globally, this was still not enough sellers order flow to break below these previous historical lows or create new lows, right? And when we're looking at the price action after the Brexit downside move, you can see that we wicked down to retest previous lows, failed to break, and started to notice very weak sellers price action. You started to get a mix of bearish and bullish candles, as well as very weak candle closures as per the bodies, and multiple liquidity grabs and tests of these lows and failures to break. Now, when we're looking at so what this is telling me is that this is an extremely strong historical price point. And what it's also telling me is even with Brexit, even with pandemic markets, there was still not enough sellers order flow for sellers to remain at these lows or break below these historical lows, which is telling me a lot of buyers from a macro perspective have entered from this positioning And if we get signs of economic recovery, where so far we're getting potential of a Brexit deal, and we do have even though the UK is in lockdown, the year is long. There's 360 days in this yearly candle, and there's a lot of potential that we could just even dip lower and then flip bullish, get a breakout of that bearish market structure and above this price sensitivity area, and start to see a rally on GJ at least up to retest some bearish market structure, which we will better identify. But as we have the signs of that historical repetition, and I'm starting to see more potential signs of that historical repetition when we're looking at the logic behind sellers failing to remain at these lows or break these lows, or at least even revisit these lows for an extended period of time, even with all of those negative fundamental catalysts, even with Brexit for 5 years, even with coronavirus, even with when we had potential Iran war that strengthened safe haven currencies, even with all these different political tensions, biological tensions, economic tensions, there was still not enough sellers in the market or sellers order flow to break into a new low as of yet. And this is better identified when we go down to like the 3-month time frame, of course. So when you come to the 3-month time frame, right? This is what I'm talking about the potential for historical repetition, like how we were discussing from a macro fundamental standpoint. Now, overall bearish structure, better to highlight here. I can draw a line, but you guys get the idea. 2008 sell-off, this was the historical lows that were created. Years later, economies enter a recovery stage. This is something that I've discussed over and over again, but it's so absolutely crucial to understand hand in hand of the timing of economic cycles, the timing of events, and how they paint the picture, and how this information can be used, how history keeps repeating, okay? So please understand why I repeat this over and over again. So as 2008 financial, even I get tired of repeating it, but it's so useful, okay? 2008 financial crash created these historical lows. You had this higher time frame bearish market structure being respected. When you zoom into this piece of area here, you can see this bearish market structure is being respected. This was the lows. Okay, we failed to break these lows, and years later, after the 2008 financial crash, the same time gold had that sell-off correction after peaking all-time highs, you see that safe haven currencies lose strength, Japanese yen weakens, risk currency strength, macro lows get bought up, economies are also in a recovery stage, and you have this extended upside rally, of course, until doom and gloom, Brexit hit the scene. All right, financial crash here, FC, Brexit here. Okay, now Brexit went on for this extended period of 5 years, and we had virus come into the scene that caused another economic reset and financial collapse. But that was right here. That was not even enough order flow to break these previous historical lows, break these candle body lows. Now we can see months, a year later after virus hit the scene, and we're starting to phase out some of that fear. The same time, Brexit has now come to a potential deal that still has to be validated through like legislation, but still is coming to a potential deal. And the same time, technically, we're getting a potential break of this bearish market structure and a validation of this historical support. Right? Brexit is fading out. Virus is potentially fading out. Vaccines are coming into the scene. So now when we start to zoom in here and you come to the monthly chart, you can better identify that bearish structure, but as well as see this bullish intraday structure we have been following since that COVID market collapse. Okay. We are starting to enter this squeeze and very crucial higher time frame and macro decision point. But through our dissection of potential historical repetition and through our dissection of the market structure and price action and economic cycles, we can validate and create a theory for ourselves that if we break above these previous highs, like for example, if this yearly and monthly candle is just starting out as buyers are cashing out from the previous optimistic run, and we're having a pullback for the new year, the new month, and the new quarter, if this is just a pullback that fails to break this higher time frame bullish structure and fails to break these previous candle body lows, and it turns bullish and we break above 142, as well as have more market optimism validated by weaker safe haven currencies. We start to see a sell off on gold and gold's value decrease. We start to see global equities still continue bullish through 2021. We see more optimism going forward with Brexit, UK come out of lockdown. There's a lot of potential room to start revisiting these previous price sensitivity areas, which that is a massive like 2000 pip rally from the 140s to like the 150, 160s. All right. Something else we want to confirm fundamentally is Brexit was active, COVID was active, and lockdowns were active. BCL is not a real thing, but you get just Brexit was active, COVID was active, and lockdowns were active in the UK and are still active. And that wasn't even enough order flow to break below previous lows or revisit previous lows. So yes, logically, a lockdown is bad. Yes, logically, COVID is bad. Brexit was bad. But the market doesn't just operate on economics or logic. It operates on various factors, such as institutional order flow, such as economics, fundamentals, and mainly investor behavior. Even though institutions may make these massive moves, their moves are still based on these different aspects. So what we want to understand is we had all of these logical, quote unquote, bad negative things to impact UK economy, but it still wasn't enough for GBP sellers to take over. It still wasn't enough to break that intraday and higher time frame bullish market structure. And it still hasn't, right? And we still have a lot of potential for that historical repetition as well. So it's very interesting now when you start zooming into the time frames and aligning some key areas of interest, seeing that potential of historical repetition alongside your other fundamental and technical factors. Because right now what we do have is vaccine, as a lot of the COVID virus fear has been priced in over the last year. We would really need new fear catalysts. We have bullish market structure still being respected on the intradays and these higher time frame lows still being well respected. We're at a very key decision point on the higher time frames as well, and potential for that and potential for this historical repetition here years later after the 2008 financial crash, and that rally to take advantage of with all this liquidity generated from the downside, with all the failures to break these historical price points, right? We can dissect all of that information in real time and align it with real events that are happening right now. So if we have COVID talks start to simmer down, the UK lockdown works, cases start to decrease, economies open up, we have more optimism regarding Brexit, and we get a break of this bear structure and a break above 142 area, easily expect a retest of the 150s, 160s. Okay. I would only be looking for sells really at this point on the higher time frame if we came back below 130, 135-ish, 133 area. Then I could see sells down with mass market fear needed. More fundamental fear and new fundamental fear that already hasn't been digested, priced in, and monetized and banked on by investors. Right? Really pay attention to the wording, really pay attention to what I'm talking about, and re-watch these webinars if needed and align it with your own concepts, okay? Because this is going to keep happening the next 10 years, the next 20 years, history is going to keep rinsing and repeating. And if we have these tools to align the technicals and real-time events and fundamentals, it's perfect for us. Okay? So, obviously, we're seeing this downside move now, just at these previous intraday highs around 141.5, 141.8, and it's the new year, right? You have buyers exiting out positions, you have sellers jumping in, the yearly, monthly, and quarterly creating that lower wick, generating liquidity. But as long as we maintain this higher time frame bullish structure and we get a clean break above these previous highs and bear structure, that is quite a solid bull run to the upside. That I will only see safer long-term sells on GJ below 133. That would validate a technical break of structure, a break below this price sensitivity area. You can see where we had an intraday high created, right? When we zoom in the time frames. And I would need new market fear, new fundamental catalysts that would bring sellers pressure to the sterling, to the pound. Because so far we've seen that Brexit couldn't do it. We've seen that COVID couldn't do it. The lockdowns couldn't do it. It doesn't matter. Even though we've had some ranging on the intraday, even though we've had some strong pullbacks and sell-off moves with crazy Brexit headlines, it still hasn't broken macro bullish structure, and it still hasn't broken that potential for historical repetition. Now the daily, you can better see this structure identified, right? It's very clean here. Obviously, we're retesting and having a reaction. At the same time, we came towards the end of the year, and a new year. It was the same time we retested previous intraday highs from September, right? This sell-off move, does this mean GJ is a 100% sell-off? No. Right now, we're even just retesting these previous candle body highs, still well respecting bullish market structure. With still a ton of liquidity here that is validated as buyer side liquidity to potentially break into a new high as long as we don't break this bullish structure. And with our targets being to retest these previous price sensitivity areas, you can see to the left. Okay. Even when we come to zoom in to more of the intraday price action, yes, this is a strong sell-off candle, but we still had new intraday highs created that broke above a strong price sensitivity area. And again, very bullish structure. This is still buyer side liquidity. Okay, so now we just want to zoom in alongside our key levels, psychological price levels, and intraday chart to see potential entry points and what we would need for sells, what we would need for buys and execution areas. But overall, hopefully that makes sense to everybody. The potential for historical repetition, the timing of the end of the year and fiscal year, how a lot of the fear around COVID has been priced in, and we might start to enter an economic stage of recovery, right? And how we've had some short-term resolutions regarding Brexit, how UK lockdowns and COVID spikes hasn't had even though it's had a negative impact on UK economy and people, it hasn't had enough of a negative impact to have investors of the British pound start shorting it or offloading it. We still have buyers in control on the higher time frames, even with those negative events. And of course, the price action market structure on these time frames. So now we're coming to the 4-hour, right? What I wanted to identify was, of course, these are our higher time frame key levels that we already have mapped out. And this is that bullish market structure we are playing on. But we are also starting to get a break out of this bearish structure. You can see where we had that sell-off, this pullback, lower high created, another sell-off that failed to break previous lows, started to develop bullish market structure. And this is a lot of potential buyer side liquidity as long as we remain above even 138.5 for the new year, even 137.2. Even if the new year came all the way to 137.2 and then pop back above, this is an easy buyer side liquidity order block on the intraday to continue up bullish. Even when we're starting to zoom in now, we're starting to get a break out of the bearish structure here. Sorry about that ding sound you guys are going to hear. Okay. So we're just going to keep it like this. And I'm just going to start labeling this out and mute myself for a second. So something I want to note about here is it's similar to like here, right? You have some strong moves, but then as you fail to break previous lows or respect structure, and you have these intraday highs and lows created, GJ can play in this range for an extended period of time until you have a continued move following structure. You can see this is still buyer side liquidity that led to be a new high being printed. And when we had a pullback and retest, it went to retest these previous highs and failed to break. So this to me is still looking like buyer side liquidity to get another impulsive break to the upside unless we have a break of the lows, right? Unless we get a real break below 137.2. And in this case, it would be below 136.5 because we need a break below structure. I don't see any higher time frame positional or safe macro sells on GJ. Maybe if we have some rejections on the upside, but hopefully that makes sense. But I'm just going to continue labeling it here. So if we have a pullback and break above previous highs, and I don't have the psychological price levels mapped out, but of course this would be around 141, 141.2 area actually. 141.200 ppl. That is safer buys to continue up. Damn, that shit gets annoying after a while. Okay, so GBP, make sure you guys watch this webinar. You already have if you just heard me say that, so that didn't make any sense. But some higher time frame intraday analysis. Holy man, that shit hurts my ears, but it is useful. Some higher time frame and intraday analysis. The yearly chart, quarterly chart, and 1 month shows potential for a historical repetition of what happened the post 2008 financial crash. We still have an optimistic resolution regarding Brexit, I like to call it, which is still active for now. The UK lockdown and COVID case spikes in the UK has not caused a mass sell-off on GBP, right? Against like our safe haven currency pairs. UK equities are seeing exhaustion, but they're still at highs and still bullish on the higher time frames. Our bullish intraday structure is still being respected, as well as we have a potential break of this intraday bearish structure. It's just with the timing of the new year, we can get a deeper pullback. Our safe haven currencies are still primarily weak. The volatility index, which just shows more of the market fear in North American markets, still hasn't broken previous highs. Japanese yen hasn't broken previous highs just yet. And the US dollar hasn't broken structure previous highs yet either. Still quite bearish. If you guys looked at the sentiment report that was sent in the main feed, easiest buys would be if we get a pullback and then a break above previous highs at 141.2 to have an impulsive move up, like a repeat what I was telling you guys to the left here. Or higher risk, higher reward buys would be a retest of 137.2 around bullish market structure in this previous lows, where we had great reactions at our higher time frame key level. Or this is more intraday and higher time frame analysis. Our bias is more bullish, just looking for pullback and entry points. So when we do our market update webinar, or when we do our trading sessions during London, of course, we're going to be looking at the lower time frame and have our psychological price levels laid out. So we could find way more refined and accurate entry points, right, while we're looking on the lower time frames and playing the day-to-day structure. This is more macro analysis to understand the trend structure, what's going on, how investors are digesting the fundamentals, and how we can use this information. And for anybody who wants to take more intraday and higher time frame trades when we get these confirms. I would only see safer sells if we saw the Brexit deal backfire, new fundamental catalysts and fear confirms regarding COVID and vaccines, a break of this higher time frame bullish structure, break below these previous lows, and a break below key level 136.5.